Before I got this recording going, we were talking about our week a little bit, and especially how late in the week Apple kind of led the way, and you saw a lot of tech make a move and actually sustain some of it. Interestingly, a couple of mine that I follow were having some trouble holding on to gains. Like Snow's a good example. And since I'm doing screen sharing this time, I'll go ahead and call that up just real quick. That it had that big spike on Wednesday and got up to like 192, and then really just kind of gave most of that up the rest of the week. And a lot of that was flow driven in the sold calls. And to me, this is kind of what we might start to see across a broader range of tech stocks, where they get a little bit tired on these big moves up, and there's going to be some pullbacks. Still prefer the upside on a lot of these, but I do think you have to be patient and try to get a level. I have 172 marked there. You can see 170, 176 or so as well. And let me share in Discord too. Sorry about that. And yeah. Okay. More permissions. All right.
Oh, sweet.
It's going to make me quit and reopen. All right. I'll be right back. All right, here I am. So we'll do that, and there, and there. Okay, yeah. So there you go. So yeah, basically, not to get it too much into individual stocks, but these kind of pop and fades. I put that on Twitter that I thought that kind of trade was going to be back. Just be careful about chasing pre-market moves, and not necessarily that you should look for puts, but I think the calls off some aggressive selling, particularly if it's at a level, is going to continue to be a kind of prominent setup in the large and mega caps. I had shared with you that I thought that some small and mid caps would start to fire off, and this is the biggest distance between small cap pricing and mega cap pricing that we've had in many years. So I was curious about your thoughts on what you see in some of the smaller stuff.
Well, I mean, it goes a little against the grain, so I don't really say it in our room much, but like I wouldn't be trading tech. But if you trade tech and you know the charts, that's what you should trade, especially on the option side, because you can kind of play the smaller percentages of moves. Mm-hmm. But I would really be mindful right now of like just doing basic math. Snow's a really good example. We started out at 130 on that. Simple math, that 195, 190.48 top is 50%. That, I mean, that the 25, 50, and 100%, and you can go higher than that too. But those are really psychological profit taking levels. Yeah. For anyone in a trade. So kind of be mindful of that. The 172 you talk about, I definitely see it on the chart. Anything above that 140 pullback we had in May is great, but you really wanted to hold that 170, 172, 175, whatever you want there. But again, the reason I'm talking about Snow is it comes down to chart knowledge. Like if you have it, that's what you should be trading. If I was doing research in DV, I would definitely get into the smaller stuff in either that's got missed in the sectors, that's more utility to the stuff that's ran, or just completely different and boring. I think we kind of nailed a few. With the crypto, what was the week, AI the week before? Yeah. I was all over the what do you want to call them? Like your big lots, your Overstock, your Ross, all that stuff. So you just got to kind of do the research, find charts that are beat down in the sector, and look for a news catalyst. I definitely think the rest of the year, the smaller caps is where the money's at. That's they can't go much lower. Let's just be honest about that.
Yeah, and some of them, and I have one I'll talk about in particular in the next segment, but they took a hit on earnings while a lot of other people didn't, and they're kind of in that even just recovery to that mid candle that we talk about. There's definitely opportunities there. And real quick, one more thing on snow. I posted today that there's 300 C leaps that whales are buying on this, and I think it's important to understand what that means, because I think in some ways whales are seeing what I'm seeing, which is, if the 170s, lower 170s can hold, and we just make some support here, dip below it, and come back, this stock can catch its breath and go a lot higher. It's been that high, and it's passed, right? But the thing is, they're buying those leaps around 172, and they'd probably just cut those if we head back down into like the 150s or something. Or they're also for 2025, so they can just hold it as long as they want. They can hedge it, do whatever. It's hard as an individual trader to enter a leap that's over $1,000 for over a year from now and just say like, okay, I'm going to trade this. So you just have to be careful about that. But leaps were the first thing that got me thinking tech was going to do well this year when I saw them late last fall. So they're not, they matter. They're not meaningless. They're hard to, that's the kind of trade that's hard to follow a whale into, though, because they just have so much more that they can do as far as selling calls and puts than your typical trader does.
Yeah, no, I mean, I think I don't want to say nailed it, but no one's perfect. No one has a crystal ball. August to April going to be the bottom in the sexy stuff. And did we nail the exact bottom on everything? No. But your entry on any tech from August to April is probably pretty good. You're probably ahead right now. You're really good if you waited till Christmas.
Yeah.
Pretty much on everything. Which I expect most people did. I think you posted it the other day. I didn't buy till January, February, March is what I think of what you said.
Yeah.
And you're still doing really, that account is probably doing better than your trading account.
Yeah.
It's just what it is. And that's kind of why I've pushed my mentality back to swinging, is because just the way the market mechanics are moving right now. I missed a lot. I didn't get all of tech. I didn't get enough of tech. I didn't get enough of NVIDIA. I didn't get enough of Tesla. I didn't get enough of AMD. I didn't buy Snow. I don't have enough of Datadogs. I mean, you can't get it all, but for God's sakes, do something with your work. And start out small. Like I think I just mentioned Overstock, right? Like the flow didn't line up on that when I mentioned it.
Right.
But 100 shares isn't a big thing. It's like $1,800, $1,900 when I bought it. It's over 100%. It's over 100% for me. So, or real close to 100%, I think right now. So, I mean, like, this is a safer trade. And when you go underwater, for the lack of terms, and you come up and you can breathe, you just kind of let it ride, just bounce around and see what it does. And a lot of stuff is there. Back to Snow, I'm pretty sure 180 was our fair market value. And I mean, we're talking about that as being support resistance right now.
Right. Yeah, no, it's been an incredible move. And then and
you were offered that dip. I mean, I know Goose is like getting really good at that, but when it dipped down to 140, one of the few people, not counting you, that was pounding the table like this isn't right, and we're right back up to 52-week highs and whatnot.
Yeah, because it was the anomaly of a tech stock, particularly a cloud stock like that had a big drop on earnings, dropped almost 20%, and we're just kind of like, this isn't going to last. And if we wanted it to go a little lower to the 130s or whatever, but you just jump into it, and I got in with a smaller position, but it's a good feeling to I don't care if it's, I mean, we joke about the one share thing.
No,
I mean, I think it's for real though. You know, you want to get something from the work that you put in. I don't know if it's one share, 10 shares, fractional shares on this bigger stuff, you know, whatever. I mean, get in there to where you can sustain something. And on the option side, you know, I've really learned some of these setups that I mean, yeah, I can hit a weekly every day on some of this. Or I can just add a few weeks to it and and catch more of the move. Ulta calls that were, you know, plausibly going to go in the money went from 300 to over $1,000 in 3 days, and they had a few pullbacks there. But if you actually have some time on the contract, you can weather some of that, especially when you take profits early and you actually we joke about, you know, make sure runners are actually running. You get in that situation, and it's a sector that I talked about for months that, you know, to avoid anybody with, you know, shelves and warehouses. Well, those came around, and you know those they're kind of having their moment now.
Yeah, no, the big can of worms to open on the one share gang or anything like that. But I mean, we haven't done this for 20 years, right? Like we were kind of still figuring out what works for us,
Yeah,
not on the trade side, but on delivering information and getting people on track. Like we're still figuring out what works for us. You know, we just boot people that are dicks, or do we like try to talk through them and help them out? Like, you know, we're still figuring stuff like that out.
yeah,
And for me, that what I bring to the table is my experience. And I've said it a million times, but I literally started trading by buying 4 or 5 things and going back to work. And some of those things you could only buy 2 or 3 shares at a time. I wasn't throwing 5 grand into Tesla, you know, like
yeah,
I wasn't back in the day. I was just buying some shares, buying some shares. The only one I really went large in was Nvidia. And it was probably foolish at the time to put that much money into. It's like 100 shares at 160, 165, something like that.
yeah,
It's a big chunk of money, but I had it. I was like, all right, I'm just going to do this one. But where I won, as opposed to taking, let's say, that 15, 16 grand and just playing options, is the time. I
yeah,
couldn't lose through time. And if we'll just use snow as an example, if you got 2 shares of snow for $300, or you got an option, well, I guess it's 360 now, Jesus. Or you got a $300 option contract. I don't give a flip when it expires. Those shares will never lose the value, intrinsic value of the stock price.
yeah,
That option contract is going to be worthless at some point in time, or you're getting shares. That's just how it works. I mean, that's mechanics of the market. So to start in the harder stuff, like for me, it's DCA into stuff, go back to work. All right, I can trade. I got some money to trade with. I got an account side I can trade with. Buy shares, have some winning positions that you're like, I'm never letting go of the Tesla hundreds. I'm never letting go of those sell covered calls.
yeah,
That's your introduction to options for me. Me personally, that's how I would do it. And then if that works for you, then you buy calls because you already understand the mechanics of how calls work. And then you kind of progress from there. But a lot of people just jump in feet first, buying some weeklies. Like, what are we doing? Like,
yeah, and
especially,
especially you know, early in the day, and I've been over that so many times that that those premiums are jacked early in the day because the whales want to get out, right? So and people chase, and so, you know, if you do want options, that secondary move is really what, you know, what you're after. And yeah, I mean, as far as you know, I want it to work out with anyone who signs up. I just can't, like, in good conscience, sit here and watch someone blow thousands of dollars a week over and over when they're just not getting it, you know, and they get frustrated. You know, people lose money. They want to blame me and my notes or whatever, even though the notes worked if they would have just read it, you know, closely. But yeah, I mean, I'm not gonna be around for that. I think that there's a big lesson people learn in trading, especially, you know, the options first people. It's like, you know, damn, I lost a lot of money pretty freaking fast. So they want to do something different. And it's those people who like, okay, I'm going to try something different. Those are the people I want to try to reach and get them to understand how we operate, what we do, and how they can build a style based on based on the work that's already here. But I don't want to help people gamble. That's not really what we're all about.
Yeah. Well, I think that's the kind of the elephant in the room. Like, if you're going to learn trading, probably going to be a little bit of tuition tax for you, right? Yeah. There's a market tuition that's going to happen.
Yeah.
You're just probably going to have to take a loss to learn some things. I've always tried to help people, or want to help people limit that cycle. So it's not a year, it's not 2 years, it's not your whole account. It's not that you give up through that, because you have to learn how to strike out. And some of these guys that we've ran across, like, they're not even in the batter's box. Like, they don't even want to do the basic steps. They just want someone to tell them what button to click and it's supposed to work. And I don't think anyone can do that. So.
Yeah, and I mean, and sometimes like the position sizing, don't go 5-10 times higher than what I'm doing. I'm the one who wrote the damn note. I'm pretty confident in it, but I'm not gonna buy $1,200 of snow weeklies at 8:35 a.m. No, I'm not gonna do that. So yeah, I mean, that was why, like, we were doing options. You got to learn how those percentages move, and why would you try to learn that putting up $1,000 instead of $100? That has never made sense to me. So yeah, there's some definitely psychological barriers to trading, but there are just so many people come in from that Twitter environment and the $1,000 gain posts, and what they don't understand about a lot of those people is they live off the subscriptions. They play a ton of trades, both sides, and then they'll just post the ones that win. And they set up their call and put triggers in a way that they can just not do what they post, and then post like they adapted to what happened. Like, oh, it didn't hit the trigger, but I saw XYZ and entered here, and so. Yeah, I mean, there's a lot of manipulation of results that happen, and this is where we say timestamps don't lie, because we'll identify something that is in the dirt, showed some signs of life, then it's up 20% in shares a week later. So that's what we're all about.
I've noticed on the Twitter traders that are making it still, a lot of them have scaled back, and they're like, all we got to do is get one good trade, because they're looking at their trading history. And they're like, I traded 50 times for sideways or a little loss. If I would have just took this one trade, I would have been okay. And that's the mentality of the 2 or 3 year trader right now on Twitter.
Yeah.
Twitter is flipping worthless for me. It used to be a good resource, and it is worthless nowadays. They just don't have the manpower to move anything substantial. I mean, they might be able to bump a weekly, right?
Yeah.
But it's done in 20 minutes. You don't even see it, to where before a Twitter pump could last 3 weeks. There's just not that out there anymore, which I think is healthy for the market, to be honest.
Yeah, and they're just they're way late on things. And
always.
And I was on one, a guy was talking about, like, you need to be holding John Deere puts, and it was at 465, and I had just shorted it from over 400 to down there, and kind of backed off and waited. And I said, this is like middle of June. I was like, I would not be shorting this year. Well, Deere's back over $400. So you just I don't know what the hell they're doing with what counts as confirmation for them, but just so often the move's already over, and in options, that'll just kill you. So
a lot of those guys learned in the 2 or 3 years ago in that momentum market, and the market really didn't stop during that time. So you would just have to wait for a pullback to get entry, and that's just how it works. So when it runs 50%, that 10% pullback, they think this is my time, and that setup might be coming back. It might have been back this year, but it hasn't. It's not like it's not summer season for that. We're not in the prime season for that yet. But it's just how they learned how to trade.
Right.
Which I can be critical of myself, right? I miss a lot of stuff because I'm too cheap because I do it the other way. Like I have to get an overreaction to the downside that I think is too much, or I don't like to trade it. Supply and demand, support and resistance, and then pullback. I mean, that's all I look for. So everyone should have that, but I think the one that is least effective, especially for options traders, is we run 50, 100% over a month or two, and it pull back just a little, and this is my time. I don't think your Mara and Riot leaps are doing great at this point in time as the ones that you got when it was $3 when you called it in January.
Yeah, no, absolutely. And real quick, one more individual stock, and just talking about areas of to improve upon. And like for me, I was on MDB. I was like, we've been up here for a bit. I think it's going to break. I think it's going to break higher, and it did. So like I'm not trying to pick an example where I was right to say like this is a criticism of myself, but it is in the sense that this was a hard move to get, at this kind of last little bit of it, right? Where it's like this 400 test and, and breakthrough there's a lot of risk in that, because this easily could have gone the other way, and it tried to a few times. So it's not, and I didn't put it on the hot list because of what you said, that like, this is like, advanced level options trading. This, it had the huge move and then that move higher. It can happen, but it's really hard. It's hard to trade, and you're just going to get more resistance and pullback when it does that. So I think for me, moving on from some of the biggest winners, that taking the win thing that we talk about is really important. And you can't let this idea that like, I should have bought more of this at 220 when I was talking about it all the time. You can't really let that mess with you too much. You just let it go, let it figure out where its new support is going to be, and then you can come back to it. So that goes for me too. Absolutely.
It's funny you say 220, 220.02 only line on that chart. The top line on that chart. I think the bottom's like 150. But yeah, another great example of like if you bought when we first started talking about it, you're okay. Probably on options and shares on that one.
I got some shares down there, and I still have them. So that makes me feel better about not getting leaps or something. But that one, it's something I've kind of learned about identifying stocks when you get this kind of perfect combination of float size and insider ownership and sector, and the way that those can move. And it's why I don't just stick to SPY. That's just never been my thing. But speaking of which, do you have anything
let me say one more thing, and then let's go to that. That's one thing that I've been like, especially this year, trying to be mindful for, and this is more for you than the room, but I want them to be mindful just like the way I communicate. But I have to be like, I used to just kill you, and I still do on the dollar stocks. But like when you would give me an all-time pie chart, I would be like, dude, like leave me alone with this. Like let's trade something at the bottom. But through time, like I need to be mindful of what perfectly sets up an option trade. And you can trade like this at 350. You could have totally traded, but I'm not buying shares there.
Yeah.
So just because it doesn't work for me doesn't mean that it can't work for you. And it's the same thing with like Overstock. That's just a good example because I won on it. But like it worked for me off that support level, even though there wasn't no flow, and me trying to learn your cues and apply them to what I do instead of just being stubborn about what I do, is I think where we do better on these like larger caps. And we're doing it now with we do it like with the fair market value thing. and like I'll ask you the dates because those are kind of important.
Yeah.
But yeah, I mean, yes, this was a pro trade, but I need to be mindful that you can still trade it, and hopefully someday the people in the room can do it too.
Yeah, no, absolutely. And that's why in, those early morning notes, which, I'm going to keep doing. I had some hesitation about it just by the way people would just sort of not read it closely and just sort of just pile in. Okay, is this bullish? Is this bearish? I'm going to buy calls, going to buy puts, not even looking at the chart when the chart is everything. But yeah, real quick. So on the combination of our styles, coin is just the perfect example of this. And I have more lines on coin than I do on it from maybe any chart, but it's just because they do actually pan out. And so it's like you have your level smack in the middle of a couple of mine, and it's a big level, and it's like a spot to get shares. And but the stock is just going to gravitate towards these local pivots, try and fail. All of a sudden it flips one, and then it flies right through them, and then it it cools down and starts to pull back. And like on coin, you're not buying shares at 67, 98, but options trades do work very well there. But I think the thing with coin, and we'll keep getting chances at this, and I keep wishing I did a little better, is just to keep a little more for this move up, and just to kind of trust the direction a bit. You're always have in the back of your mind that the SEC is going to try to shut them down one night, and it's going to drop 30%, after hours or something. And that can happen. But we're three, I guess, 4 times into this kind of move like this. So yeah, and that's just a perfect example of our blend of styles, I think.
No, and that's what I think we like privately both say, all right, here comes the FOMO, and we're pretty accurate on that.
Yeah.
Where we do different is the levels we play, and I think coin is the eye opener that kind of has told me that. Because like Tesla's a good example. People will be like, let's do this, and I'd be like, just wait a month, you'll be okay.
Yeah.
Because of the way I trade, but again, being mindful of other people can trade it differently. But man, coin 76.43 is the top for me on coin, and we're running into that right now.
Yeah, and it I just put it in my my sector notes that you go way out in the leaps on coin, and the stuff at like 50 puts for like almost a year from now, those are on the ask side. 100C, forget about it. Any expiration it's 100C is all bearish all the way. It's all just like whales just selling into you. So I think the 80 thing could happen, but 100 not likely. If that ever did happen, very quick move up there, and I'd be loading puts up there because I just don't think they're gonna let it go there.
We were 80-30 on that little
yeah,
I don't want to call it side bet, or for fun call.
Yeah.
We hit 76, we're at 71. I still think that's a 50-50 bet.
Yeah, right. No, I know. I do too. And the big thing too, I caught on Friday. This was I kind of just stopped trading after this, but I did puts on coin and MSTR, just looking for a test of a line, and news came out that the ETF filings were kind of initially rejected for Bitcoin, and they both just collapsed. So my attempt to test a level, went 4 or 5% lower, and I on the MSTR, I bought it for like $150. It was $700 in 5 minutes. So I'm like, okay, I think I'm going to just shut it down for today. And I just sort of, went to studying after that. But yeah, I mean, that's the kind of thing that happens in crypto. It's kind of hard to catch those moves down. And so I think, though, that what you got to understand is they're recovering, and they're kind of, going back up. And as long as Bitcoin stays, stable and kind of constructive above 30K, you can rely on those to keep bouncing back. But you just don't, you just gotta be mindful. If you think some move way out of the money is going to happen, you don't have to buy a strike up there. You don't have to buy 80C if you think we're going to go to 80. Buy 72, 70. Yeah, buy that. Buy 75. Buy 72 if you want to be safer. Because the further out of the money you are, the more that premium is going to collapse when we do pull back. And just a basic intraday 5-minute pullback can take you down 50%. Who the hell wants to do that? So you're not, you think you're taking on less risk by buying a $50 option. If you want a $50 option, buy Riot where it's closer to the money. Don't buy coin $5 away. That's a big lesson.
Totally.
All right, so you want to get into SPY a bit, and then I'll go through a couple things on oil and all that afterwards. But what was your take on the week? I didn't have our levels written down, but
me neither. I didn't bring my big notebook either.
Yeah.
So I'm like, I know. I want to say we were. Oh man, I can't. I know we weren't this high. Let's just get that out of the way.
Yes.
We definitely are wrong on this big upside move.
Yeah.
But I think we were at like 132. Let me pull up a weekly here, because if I look at a weekly, that's usually what I look at. Where's my weekly? This thing doesn't have a weekly. All right, let's use this. I think we're at like 130. If Friday didn't happen, I think we were right. With Friday happening, we're way wrong. We were real close again. I think I had a couple dollars more to the downside. I want to say I was like 132. Which it started the week there.
You mean 432?
430, yeah.
Yeah.
Sorry. But we didn't last there long. I've seen consolidation, which we had until Friday. Friday's an anomaly here. First time I'm looking at this chart since Wednesday, but
yeah, it's just that that PCE reaction that just went crazy. And then I actually saw it with corn went down almost 7%, which was crazy. And I think that was actually involved with that PCE thing too, kind of on the the downside of it. But yeah, I mean, that was just an incredible move up. And when you see that happening, you just try to catch a piece of something that pretty well, and that's kind of what I did. But I mean, yeah, Apple calls went 2,000% or something like that. So that's that's pretty rare. Tough week to forecast with the July 4th on a Tuesday and a half day Monday and all that.
Started the new quarter.
Right, that too. Yeah, that's the thing. I don't know how much there is to this, but this idea that a lot of funds end a quarter with some window dressing, like we'll get a little more Microsoft here, or a little, like that, that there's that kind of thing that goes on with some of the buyers at the end of a quarter, that what they do with those positions right after that, I'm not really sure. I think we get some kind of pullback, I would think. But
well, their process is math based.
Yeah.
So they have 1.39% of their account in Apple, and Apple has given them 15% year to date returns, and so they're going to increase that to 1.47. Stuff like, I mean, it's very process detail, or there's a reason why they make their moves. On both the financial part and on the chart and on the PE fundamentals, all that stuff comes into play for them. But they up their position. That it's big in the money amount, but it's not big in the percent of their account amount. And then they'll just start adding those shares at, like the 50 EMA or the 200 EMA. They dip by. They don't just add because we're adding. They pick a price, and that's why you see support resistance in a chart. Oxy's probably the best example over the last 2 years of that. When it hits 56, whatever, Buffett buys it all. it won't go below that because there's always a buyer at that. And figuring that out in charts is very, very important. And especially on these tech ones, right, that are super, super high, because they're going to hold something. It's going to happen. And that's probably your best entry and without bad news.
Yeah. And I know like people are always all over Kathy Wood, like when she sells some Tesla, oh, well, you have this crazy price target. Why are you selling? I don't know all the ins and outs, but I mean, she runs a fund, and funds get in and out of positions for lots of reasons. And so it's not just about like, oh, I think Tesla's going to keep going up, why would you sell it? It's it's a big position for them, and they move in and out and buy other things and take some profit. So I don't put too much into that. It's not like a fund starts to get out of something, oh, it's going to collapse. It's not really that simple.
I think you got to keep it simple as opposed to the quarter and the month.
Yeah.
And with your thesis, do you think it's a time to buy, or in general buy stocks, or is it not?
Right.
And I think, I'm not a bear by any means. I think you can always find something to trade. But I think we're going into FOMO season. I really do. I'll equate it to the housing market. No one bought houses for like a year and a half, right? Like the interest rate just went through the roof overnight pretty much. And everyone was like, no. But we're getting to the point where those people are like, I'm not waiting anymore. I'm done missing out on home ownership.
Yeah.
And the housing market's coming back like strong right now. And equities are going to do the same thing. They're assets. House assets, cars an asset, equities are assets. It's going to come back the same way. And I think we're just starting that. Could we have a down quarter? Sure. But as I said, August to April, those were the lows. Don't see October coming back. Again, I just don't. So that puts us in an upward trend. And it's not going to be quick, but it's an upward trend. SPY's 440. You know how many bets I could have won?
Yeah. Yeah, I know.
People probably would have gave me 380s, 390s in January, right? Like,
oh yeah, yeah.
And so have we ran? Yes. Will there be pullback in the stuff that has ran? Yes. Is there more stuff that hasn't ran than has ran? 100%. So yeah, sit there and pout about Tesla, or find the next one. Pele Carnival Cruise. I think me and him are the only ones that got in on that. But there's another one, fair market value, when it was 7 or 8. What did we say? 16, 17? We're 18 now. So just be confident and give yourself some time. I guess that's the best way to say that. But as far as back to SPY, I'm a bull. I'm a bear here. This is how to pull back, man. I mean, I've been that way for a while. A consolidation or sideways for me. I don't know how you see it, but even if the small stuff runs, I don't think it can hold up SPY, right? That's not how that works.
No.
Run ain't helping QQQ.
So I think what you could see as far as the nature of this pullback is, SPY has a lot more stuff in it in the other sectors, and healthcare and oil and all that. So I think its pullback could be smaller, and I think QQQ could see something more drastic. That's kind of my read on the week going into it. And by drastic, I mean QQQ could fall 1%. It was up 1.5% Friday, so that's not, it's not even. That could just be just consolidation. So I'm not, predicting anything dramatic here. But yeah, for SPY, I kind of look for mid candle, a little below at some point, middle of the week. 438, I think, is where I'm going to say the pullback happens. And then for the top, I'm going to say 442. So I think a pretty tight week on a short week's what I'm looking at.
So we're 442 now. So that's all downside.
Yeah, downside and recovery is kind of what I'm thinking. Yeah.
Okay. I'm gonna go a little lower. I'm gonna go 435. Just because we spent a lot of time there last week.
Yep.
And I'm a buck above you. I questioned you, but I'm with you.
Yeah.
445. I mean, there's a lot going on in the world right now. This has got to pull back a little bit. And then, like you stated, reiterate the holiday week. I think we had a short day too, correct?
Yeah.
Um,
Yeah. Noon tomorrow.
yeah,
Yeah.
short day holiday. And the Q1, I don't think they don't have to hit the ground running. Said it last week. I'm still kind of mindful of post Fed meetings. We just kind of bleed out a little bit, but we don't gap down or anything. So I'm still a sideways guy with this recent pump kind of failing, I guess.
Yeah, absolutely. And this upcoming quarter's earnings, expectations are actually pretty low for it, which means
Yes,
that it's easier
the beat.
to beat. So that I think works against the Bears a bit. Is so if you want some downside, I actually think you want to get it before the earnings come out instead of thinking that you can just YOLO a bunch of puts and do well. It's going to be tough for things to not meet those expectations. I'm especially thinking of the Twillos and Rokus of the world, those kind of mid to large cap techs where the expectations are still pretty modest. A lot of those companies are a lot more lean now, and I think can make a move up. So for SPY, big picture, this move to 460, we got to gather some strength before that can happen. That's kind of my take on it. But that seems like a spot, where we could at least try to challenge that, because that was the March high on it. So last year.
Okay, I see where you're at. Yeah, there's I got a monthly up right now. 458.
Yeah.
462 right in there, definitely. Should be a problem if we make it. I'm a not making it guy though. Not
Yeah.
not not during this general local conversation. If we're talking the year, I think that may be a good high point target.
Mm-hmm.
If the war ends in Russia, hop on that. But other than that, I mean, this man, we've ran a pretty good amount this year, and the stuff that holds it up does not have a lot of room to the top. But again, the market has plenty of stuff that needs to catch up. So,
is there a point at which
you're not going to see it in SPY?
Yeah, is there a point at which you think the market will care about what's happening in France right now?
Yes, I think they will. I think it will. What do you want to call it? It'll be minimal, but there could be a week or two of just fear mongering. But again, until we get to October low, you ain't changing the trend on me. Like right. October, January low, you can pull it back all you want. And that, I mean, if you're not in, you should be setting an alert on where you want to buy it at.
Yeah. Yeah.
It's pretty simple. I mean, if you're not in a stock, you need to be a fan of it going down. And if you're in it, you're a fan of it going up. I mean, that's a basic bull mindset. So if you want Apple, yeah, you're hoping for some bad news.
Right. Yeah. And kind of on that note, the one of our, I don't know how many people got in on it. I think a handful did, but natural gas, we caught the bottom on that. I mean, almost to the penny. I was saying like, it's it needs to stay around 220, and that was about where it went. And so I think that you're still in pretty good shape there. You can kind of manage your position. I had mentioned that and I made this decision just based on the last run, but I went with UNG instead of Boyle, just kind of it was a real clean read for me. And there's some kind of secondary oil or natural gas plays that I think people should still be mindful of, that I'll try to cover as best I can. But it's like AR and Chesapeake and stuff like that. So so that that sector I think is still in pretty good shape, even though it's the summer, and it's kind of counterintuitive. The copper, real quick, getting back to 375, was pretty big. That I wanted to see what that reaction down would look like, and then for that to recover. I went with steel instead of copper stocks during this whole thing. Good decision. X was really good. We were both on X. That's always a good sign. So yeah, for copper, just looking for it to stay pretty stable around 375, and as long as it doesn't make an aggressive move down to 350, I think those are still in pretty good shape. And then lastly, oil, as long as 68 doesn't just break down. I got the daily chart up, and those moves under 68 are kind of daily wicks, so it's not really looking like they can break it down much further there. So this whole 68 to 72, 74 going to kind of be a thing. But the stocks held up pretty well. We'll try to cover, I was on Oxy. Don't like Oxy as much now as I did when it was making that move down to 56, 57. But there's a lot of other stuff, your MROs and Devons of the world. So I'll try to cover those. We had said, and I'm with you, that I'm not buying a lot of tech right now. So this is where the real work happens, where we're looking at other sectors, and we'll try to cover that throughout the week.
Yeah, I would expand that tech to nothing sexy.
Yeah, exactly.
I've said that for a while, but that's just where we are.
And and lastly, gold and silver, still like those. I think we start to make a move up there. You just got to be really patient, and I think shares is where I would go there, or options, as close to the money and as much time as you can get if you're going to do options. Don't be doing weeklies on gold stocks.
Yeah, and I'm not the metal material, energy, fuel guy. That's definitely you. And for you guys that aren't the professor, so everyone else, pick one: gold, silver, oil, uranium, something, and just follow that sector. Get to know it really well. You're gonna have to wait to fish, so don't get distracted by the other fishing holes.
Yeah.
But it will help you in the long run. And then when you really learn that one, move to another one. But don't try to learn gold, silver, copper, steel, oil all at the same time. There's just too much. And that's from personal experience.
Yep.
Right on.
All right, good stuff. All right, so I guess we'll wrap up this session.
Stop, start, and go to work.